All right, guys, back to work. Back to work. FOMC is out. The markets are ripping higher here today. Tomorrow is Reaction Thursday. And boy, do we have a very important video tonight. I have 3 of my favorite setups I'm tracking for tomorrow. We might get one of them. We might get all 3 of them. The bottom line is, by the time we're done this video tonight, you'll have a game plan to make some money no matter what happens on Reaction Thursday. Now, before we jump in and get the party going tonight, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out down in the comments section below. Thank you so much for tuning in. It's been a fantastic week so far. Let's keep the good times rolling tomorrow on Reaction Thursday. Now, charts are all loaded up in front of me. I get the Nasdaq and the triple Qs. I get the Emini and the SPY. Start off tonight on the 60-minute time frames. I like to use the 60-minute time frames to plan my trades for the following day. And later on in the video tonight, I'm going to drill down to some tick charts. Tick charts, the faster time frames, make the entry timing a whole lot easier. So let's start first talking big picture, and then we'll talk entry tactics to give you guys a roadmap to make some money tomorrow as we go deeper into the video. What are the 60-minute time frames telling us right now? Well, you can obviously see we are bullish with a capital bullish right now. FOMC came out this afternoon. We'll talk more about that here in a moment. The most important thing right now is we have a huge move higher. Usually, whenever we see a big move higher like this, the game plan is usually pretty easy, but there's one variable that came out during the FOMC announcement, the press conference this afternoon, one variable that puts a little twist on the game plan for tomorrow. I'm going to cover why that variable puts a twist on the game plan, along with all my favorite trades here in just a moment. Now, before we dive into these charts, before we talk about entry tactics, trade this monster move we saw after the FOMC announcement this afternoon, let's double check the schedule for tomorrow, because a couple things you've got to be aware of for tomorrow. First things first, again, tomorrow is known as Reaction Thursday, the day after the FOMC announcement. It's safe to assume a lot of the big money players were on the sidelines today. Tomorrow, though, they'll come roaring back in and respond to the FOMC announcement that we heard this afternoon. The second thing on my radar for tomorrow is kind of the only big news we have tomorrow, which is the retail sales number at 8:30 Eastern time. Hopefully that will get us going tomorrow nice and early and get us some good volatility to trade tomorrow in our trade room. And the third and final thing, tomorrow night is the final video newsletter on this YouTube channel for the year 2023. We'll take some time off into the holiday season. We'll continue working with students here at School of Trade. I'll keep posting mindset and short videos on the channel, but tomorrow night's video, final nightly newsletter for the year. We'll come back in early January. We'll pick up where we left off. So just be aware of that for tomorrow. So Reaction Thursday tomorrow, retail sales, and we wind down the video newsletter here on the YouTube channel tomorrow night. Now, let's get back to our charts, though, because the money is made on the charts. Good to know when the news is for tomorrow. Now, let's talk about my favorite trades here coming in for Reaction Thursday. We'll start off first on the S&P and the SPY, and we'll finish up tonight on the Nasdaq and the triple Qs. This will be a fantastic video all the way to the end, so make sure you get comfortable, take some notes and screenshots. As I mentioned earlier, this is a very, very big move higher. Anytime we see a big move in one direction, there are 3 things on my mind. First of all is most of the time, whenever we see a big move in one direction, we're expecting a 2-legged pullback and a retest of that high. We saw a beautiful 2-legged pullback after the big move we saw earlier this week. So that is a very familiar game plan if you've watched these videos so far this week. Sometimes, though, we don't get the pullback. Sometimes we end up going sideways up here into a trading range. The second thing on my mind after a big move higher is a trading range. And we'll spend some time tonight putting a game plan around that trading range. The third thing on my mind is that we have had this huge run up, really ever since the market's got this whiff of rate cuts coming next year. This huge move up keeps going and going and going. You have to think right now that at any moment we may see a rug pull and a very significant sharp correction. And I'm going to talk about that tonight as well, because you have to think the rug pull, it's probably coming. Now, this one big variable going into tomorrow, and that is, if you listen to the announcement this afternoon, if you paid attention to the transcripts after the Fed speak or after Jerome Powell spoke this afternoon, sentiment is the big variable for tomorrow, because Jay Powell basically told us they're going to cut rates in the first half of the year. Right now, I believe there's an 80% chance we're going to get a rate cut in March of next year. Now, why does that matter? Well, because there could be some FOMO going on the next few weeks. Santa Claus may keep this party rolling. We have quite a bit of open space here on the E-mini, the Nasdaq as well. This could easily keep on going. So while in most cases, I'm looking for a range up here, right? A range up here, or a two-legged pullback, or potentially a rug pull. But I'll tell you, the sentiment, we may keep on grinding higher. And so I want to make sure we're ready for that tomorrow as well. So, boy, we have a lot to cover in what might be one of the most important videos of the rest of the year here. Let's now dive into the tick charts, right? The tick charts are, I think, where everything will now come together. On the tick charts here right now, and you can see right now as the market opens up, we're still kind of grinding higher as we speak. This is a 7,000 tick chart, upper left-hand corner, and this is the 21 EMA, in case you're tuning in for the first time right now. There are really two big clues on this chart. The first big clue is this big move higher. Anytime we see a big move higher, we're looking for that deep two-legged pullback and a retest of that high. We saw that big move higher earlier this week, two-legged pullback and a retest of that high. So if you watch these videos, you are familiar with that already. That's the first clue. The second big clue is this range, and the Nasdaq is very similar. We had that move up into a range today and a breakout. Now, if you watch my videos, you know that we almost always get a breakout pullback of those trading ranges. They love to break out pullback. That would be one of the dream scenarios for buyers tomorrow. Might not happen though because of that sentiment. Think of sentiment as that invisible hand that may kind of keep pushing this market higher as FOMO kicks in into the end of the year, as people start to fantasize about that first rate cut coming in the early part of next year. So knowing those items are on our list, I want to buy pullbacks, but I want to be kind of realistic with what may happen going into tomorrow. I have a trap zone below I'd like to buy. I have the two-legged pullback zone below I'd like to buy. I have the rug pull, the breakout pullback zone I'd like to buy. As we talked about last night, each of these three areas, nobody has a crystal ball. Nobody knows how far that pullback will go. And so we'll get a game plan on how to trade each of these three pullbacks, because each of these areas has its own set of problems, but they also have their own set of solutions and setups that can avoid those problems. So let's talk about this right now. And keep in mind, everything I talk about right now, if we go higher, the game plan will stay the same, okay? So if we go higher, the game plan stays exactly the same. All right, so I want to buy a pullback. I'd like to buy a nice deep two-legged pullback, but again, with Jay Powell basically cementing the idea of a rate cut early next year, we now have to look at the potential for shallow pullbacks. If we get a shallow pullback, we have to try to buy as low as we can right now. And to do that, we need to use what's called a bear trap. Bear traps are always going to be my number one setup whenever I'm buying a shallow pullback in a very big move higher. Notice the higher high and that trap below the low. In the free video course, we call these bear traps, right? It's a trap setup. Now, if we go lower, we're no longer buying high anymore, but now we have to worry about a lot more bearish momentum. The stronger that pullback goes, the more likely the market is to roll over and keep going lower. In this scenario, I'm going to use what I call a failure pattern. We teach this in the free video course. This will be a two-try failure. Rope those bears in, and let's use their stops as fuel to run back up to retest those highs. Now, if you trade with me in the trade room, you know that oftentimes these deep pullback failures, oftentimes these are going to run up and we'll get a trap entry before we go back and retest the high. So think about that failure pattern, all right, into that bear trap, again, higher high in price, and that trap back up to retest the high. Again, we're anticipating a deep pullback and a retest of that high to allow buyers to buy nice and low. The third scenario is the rug pull. We get a sharp pullback. When the sharp pullback happens, which again, I would love tomorrow, but I'm not sure if we're going to get it. If we see a real sharp pullback, a rug gets pulled out from underneath us now we have to assume all of that momentum, they're going to try to retest that low. In this case, I use called a crown reversal. Let the bears try once. Let the bears try twice. Remember, I'm not in the business of trying to pick bottoms. I don't know how far this thing is going to go. It could be here. It could be here. I don't know. Neither do you. Nobody knows. So I'm going to find an area where I'd like to be a buyer. I'm going to let those bears try twice here. Remember, higher high in price, a crown reversal needs that bear trap for that signal going higher. Bear traps are going to be one of the most important entries for the next, maybe tomorrow, Friday, next week, as we all try to keep buying as low as we can. Now, real quickly here, let's slow down. If you're watching for the first time right now, this might be a brand new language. Bear traps, two-legged pullbacks, big moves. I get it. There's a lot to learn when you're brand new to this. But don't you worry. I teach all these entry patterns. I have all the entry rules. I have hundreds of examples of all these setups of our favorite markets. It's all wrapped together in our free video class. What I'll do is I'll put a link up there for you. In the upper right-hand corner, grab a little info link that popped up there, upper right-hand corner, and take that free video course, because the strategy you'll learn in that short video series will teach you a simple trick we use in our morning trade room to know exactly where the best trades are going to be that day. Then once you know where the trades are going to be located that day, I'll teach you 4 of my favorite entry patterns to help start making money on your own. I'll tell you right now, the markets are way too good right now not to be making consistent money. If you're missing too many good trades, if you're struggling to qualify for a funded account at Apex or Top Step or whatever funded prop firm, take that free video course, learn that roadmap. It'll give you an easy roadmap to follow each day to find lots of winning trades like we do in our morning trade room. And keep in mind too, if you can't grab the link that popped up there, if you don't see the link up top there, I'll put all the important links in the description of the YouTube video tonight, the free class links, the trade room membership links, and if you're on Twitter, I post a lot of updates on Twitter or X, whatever you want to call it. I post a lot during the day. I'll put my Twitter handle down there for you as well. So find all the important links in the description, and I will see you on the inside of that free video course. Now, back to what I was saying before. If we get that rug pull, this is now we get the crown reversal. Now, watch closely on this, because this is a very likely scenario that may happen, maybe not tomorrow, but at some point the next couple days here as we finally kind of find the top here on this market. Strong run down. Expect that retest of that low. Trap those bears in. Get that crown reversal and right back up again. And again, as it goes higher, remember, buy bear traps as it runs higher. Bear traps are going to be, they could be our best setup the next few weeks here as we finish up the year with this monster move we've seen over the past, month and a half now, right? So again, a crown reversal, it's almost the exact same pattern. So learn it, right? Higher high in price and that trap below that low. A lot of examples of these inside the free trading course. Now be aware. When we get a deep pullback like this, okay, there's a lot of variations that happen with this. For example, if I see a really deep pullback, a rug pull as we call it in our trade room, we may pop up, we may hold an underbelly of resistance, and we may go back and retest that low. Okay, these are called double bottom reversals. You need to learn this, okay? You need to learn this. These can be very, very lucrative. Remember, it's an overall bull market, okay? Overall bull market. Now, deep pullback, rug pull, strong momentum. The bears come in, they short that pullback. Where are the sellers taking their profit? They'll take their profit at a retest of that low. Now remember, we don't know if this thing will keep on going. It may keep going low. We don't know for sure. So what we do is we wait for that retest. I get the 21 moving average coming over. I let rookies come in. Let them start shorting here into this low, right? It could be here, it could be here, it could be here. It's once they retest that low, low. Now look for the bears to come in. We assume these are rookies, right? Professionals are not going to sell down here. They'll sell up here, right? They're not going to sell right into that retest. Overall bull market. Don't forget about the long-term trend right now. Right? Overall bullish. Once those bears commit, now we got them right where we want them, and we can squeeze those stops. If you were with me in the trade room, if you're a student of mine, you know these tend to be one of the most lucrative trades you can find after a big move. Again, big moves oftentimes get a rug pull. That rug pull loves to retest. Once it retests, trap them in, targets right back up to retest the high. That is another variable you want to have on your radar. The third variable, which is not my favorite, but hey, let's make sure we're ready for it, right? I want to make sure with the game plan, make sure we can make money on everything the market throws at us. The final variable is if we do get that deep pullback, right? What happens sometimes is we'll V-bottom, right? There could be so many buyers here. There could be so many people that are just drooling over this pullback because, again, the rate cut fantasy, or not fantasy, right? But the tease of the rate cut early next year. What will happen is on this one is you won't get that 1, 2. It'll V-bottom like this and begin to grind and grind and grind. The grind is the giveaway. The grind is the giveaway. If it V-bottoms and begins to grind up like this, it's easy. Mark a trend line off those highs, bring it down off that low, and then what do we always say in the video course? Look left, right? Find a prior swing that lines up around that low of that channel, and that's going to be your entry. Now, I don't know what entry pattern we're going to use on that. It could be a bear trap. It could be a failure. It could be a pullback combination, okay? Again, if you've taken my free video classes, that should sound very familiar to you. We'll go out and look for whatever entry pattern we get there, the stuff you guys are learning in the free video course. All right, guys? Now, remember, if we go higher here, all right? If we go higher, because you can see right away, this looks like it may keep going higher. If we keep going higher, what's the game plan? Shallow pullback, traps, right? Deep pullback, right? It could go up. Deep two-legged pullback. Then what do? Failure, right? To try, failure, up, bear trap, get in more. And where's the objective? Back up to retest the high, right? Okay? Same game plan. If we go higher and rug pull, okay, which could easily happen. I don't know. It could be tomorrow, could be Friday, could be next Monday. I don't know. But eventually, when markets look like this, when charts look like this, right, you're probably going to see some sort of sharp correction. Again, the only variable right now is sentiment, right? That's the one big question mark. But usually, when a chart does this, usually there are buyers who are just waiting for that deep pullback, and people don't want to buy too high up there. So if we do end up running higher here right now and get that rug pull, remember, rug pull, strong run, the odds are good. They're going to retest that low, right? So grab that crown reversal up, right? Be ready for that double bottom. And again, trap those bears in and up from there. Don't lose sight. If we get the rug pull, don't lose sight of the overall directional bias in the 60-minute, all right? Don't let that rug pull, don't let the news media tell you, oh, it's different this time. It's probably not different this time, all right? It's just a rug pull. It's because we're so high up right now, okay? Don't lose sight of the 60-minute direction if we get the rug pull, all right? And again, if it keeps going higher, the game plan is the exact same game plan. Now, the next variable now is, the next kind of part of the game plan is the range, right? Because usually in these cases, we're going to go sideways here into a trading range. Let's go grab the NASDAQ. The NASDAQ is almost identical to the S&P. Big move higher. Usually when we see a big move like this, we'll see a range up here, right? Sideways range up here. We'll see a deep, two-legged correction up here, right? But again, the one variable, thanks to our boy J Powell, right, is we may keep on grinding here up higher because the NASDAQ also has a ton of space. NASDAQ's starting to look like all-time highs within striking distance here. We'll see how quick Santa is during the holiday season. But the NASDAQ, again, could continue to grind higher as well. Looking over now at the NQ. The NQ really has those two same clues. Okay, there's your big move going higher. The big move going higher. And now, obviously, right now, they're retesting that high right now. But think about, we go up, two-legged pullback, right? Buying those dips and back up to retest the high. And again, like the S&P, not as wild of a breakout as the S&P, but you've got that big range there in the breakout, right? That area is the breakout pullback zone. And again, if I had it my way tomorrow, I'd buy that breakout pullback zone. But again, we may not get that big of a pullback because of that sentiment after the press conference that we had this afternoon. Let's talk about ranges. Okay, talk about ranges, because ranges are really, really common after a move like this. Same game plan, by the way, on the Nasdaq as the S&P, right? If we go up and get a shallow pullback, it'll be a shallow pullback trap, right? If we go up, look for that deeper pullback, that two-legged pullback, right? Trap those bears in, 1, 2, and failure into bear trap entry on the way back up. Okay, I'm not going to repeat myself. Again, you guys can go back and watch the game plan, right? The rug pull, the crown reversal, double bottom. Okay, so let's talk about a range up here. So ranges are my favorite type of market. I love range-bound markets. So if we do go sideways, okay, if we do go sideways, it's basically going to be a directional range. Okay, directional ranges are really, really easy. Okay, so pay attention. Learn this. I'll tell you right now. Learn this, and you will virtually be able to print money off this computer. Directional ranges are very easy. When I have a bull market into a trading range, I'm looking to buy off support levels underneath that trading range, and then buy a breakout pullback. All right, memorize this, okay? Memorize this. It's very, very common across all types of markets. When I have a bull market into a trading range, and again, I don't know exactly where that range will be, but tomorrow I'll be looking for this trading range. If we see a trading range, I want to buy underneath that trading range, and then as they rotate higher, I don't chase it, I wait to buy the breakout pullback. Okay, now, as always, there are some variations of this, right? This is a very simple way of looking at it. So let's talk about those variations. First of all, as I mentioned before, we're waiting for a nice deep pullback right now. So if all I get is a shallow pullback, I don't want to buy too high. I'm going to use that same bear trap entry with that higher high in price and that bear trap below. That becomes the entry pattern. Now, where are targets on this? The best part about ranges is that it's easy to manage the position. If you get in off a bear trap right here, target 1 is always the other side of that range. Target 2 is the runner. That goes at the pendulum swing on the other side here. Makes sense, right? The amount below the range gets projected above the range, and that creates our profit targets, right? So pretty simple idea, okay? So range, and again, shallow pullback here, right? Shallow pullback, you have to buy a trap. Now, one more scenario, bullish into a trading range. We pop up. Here comes your two-legged pullback, deep pullback. Don't lose sight of this overall trend. In this situation, go out, look left, find some swings there, find that channel there, and look for the entry right here. Now, remember, I don't know how far this market will pull back. For all I know, this will be the rug pull, right? I don't know. Nobody knows, right? So I find an area where I'd like to be a buyer, and then we go in and wait for the pullback. We don't pick bottoms. We let those bears try once. We'll let them try twice there. Now remember, in this scenario, I can easily risk small to earn large, right? Makes sense, right? That's why if I'm way high up, I have to buy as low as I can. I hope that makes sense, right? This is all trying to get me into something where I'm small risk and big reward. So a 2-try failure pattern off support underneath that trading range. And again, as we make that run going higher, where does the market want to go? It wants to take out the high of that range, and it wants to take out the pendulum swing on the opposite side. Grab that, knowing that information, grab that 2-try failure. Again, bears try once, bears try twice. Use their stops to fuel that move going higher. And then as we run higher, there's one entry pattern on our mind, and that is always a bear trap. Why? Because bear traps allow us to buy as low as we possibly can. That's why they're so valuable, at least in my style of trading. Target 1, top of the range. Target 2, up around that pendulum. Okay? Now, one more thing here. These happen quite a bit. We talked a lot about V bottoms, okay, in the previous lesson. If we get that deep pullback and it V bottoms off of that low, right, that is also a 1-2. But now think about this, okay? Is this a good risk reward ratio? No, it's not, okay? No, it's not. In this scenario, I have to buy as low as I can. Bears try once, bears try twice, but I have to get underneath that low now because now I have to get the entry there. Why? Because that gives me the risk reward ratio that we need to make money. Okay, when you have a good risk-reward ratio, you are trading alongside professionals. Okay, you're not trading alongside the rookies. An easier way to make money, trade alongside pros, right? That's what pros are looking for, that good risk-reward ratio. And again, if we wind up going up and we end up getting that rug pull, right? That rug pull. Now the rug pull on these, let's talk about this because this is a more advanced tactic, but it's something that I think you can handle here. Again, we're going over the game plan for a range. We covered the trending environment on the S&P earlier. If we go into a range, okay, what happens a lot after a very big move going higher like this is they're going to punch up and then reverse off that high. It's basically a fake out breakout off of that high. Now, how would you sell that? How would you sell a fake out breakout? You would need to use what I call a crown reversal. We're so bullish right now, and the sentiment is so bullish right now with that FOMO at the end of the year, we'd have to trap the buyers in once, trap them in twice, and grab a crown reversal. It's basically a bull trap. It's a lower low in price with a bull above the high. That is your crown reversal off the high. Be careful with those, okay? Be careful with those. We're very bullish overall. As I said earlier this week, this is a half size position. All right, this is a quarter size position. These types of counter trend trades are not full size positions, at least if you want my opinion. However, what will oftentimes happens is we'll run up. We'll make that run higher. We'll try to go higher, and it's one big head fake. The market punches up and slams back down, right? With that huge correction as it rips back down. This is the rug pull, okay? That is the rug pull. These are very common, again, after a big move in one direction. Again, mark off that high, mark off that low. Makes sense, right? Above and below, and we'll do this tomorrow together. Don't you worry. I know I'm covering a lot here right now, but I want to make sure you guys have a game plan for tomorrow. We'll do this much slower tomorrow morning in the trade room. Once we take out that pendulum swing, now be careful here, okay? Be careful. In these situations, there's usually a lot of momentum going lower, all right? Again, don't lose sight of the overall directional bias, but respect the direction of that move, right? Again, don't lose sight of the overall direction, but respect that short-term momentum. If we get that big rug pull, this is what we want to think about that. Bears once, bears twice. I'd love to get that crown reversal, right? That bear trap to buy as low as I can, because oftentimes when we swing off the highs of range like that, oftentimes we're going up, holding the underbelly of that range and making that double bottom. These are very common whenever we see a head fake off the high because that momentum swings. Makes sense, right? That momentum swings so strong that as it goes lower, basically the bears will come in, they'll whack it back down again, they'll retest that low. And again, these are oftentimes the most lucrative trades you're going to find because again, we're overall bullish. So when all the bears who got short right here, when they take their profit down here, yeah, now the rookies come in 1, 2, and do not hesitate on that double bottom reversal off of that low. So hopefully by now you can see that we're going to apply the same tools for tomorrow, but in a range environment, it's applied in a slightly different way, right? It's the same stuff, but it's in a trend. Again, trend and range is very similar, but the patterns are applied in different ways based on the trading range. All right, guys, I know I covered a lot here tonight. There's a lot of variables as we go into the trading day tomorrow, but don't you worry. Tomorrow morning, 8 o'clock Eastern time, the game plan's all set. I have a very clear vision of how I want tomorrow to go in the trade room, and hopefully I'll see you there tomorrow at 8 o'clock Eastern time. In the meantime, the game plan's ready. Tomorrow morning, 8 o'clock Eastern time, we'll see what the market throws at us here overnight. Remember, the sentiment is the big variable as we go into tomorrow. Hopefully I'll see you sometime soon in the morning trade room. I'll put all the important links, as always, the description of the video, I would definitely recommend start first on the free course links. Get your feet underneath you, learn the basic strategy, learn the traps, the failures, how to run stops as fuel to make pretty easy money in the markets. And I'm pretty sure once you're through that free video course, you start getting going on those setups. We'll see you sometime soon, hopefully trading with us in the morning trade room. Any questions, any concerns, any issues getting access to our free video classes, you can always call the office or use live chat. I'll always be here to help out every step of the process. So keep in touch. Don't be a stranger. And again, what a great week it's been so far. We got one more day, well, 2 more days left this week, but a very big day coming tomorrow morning. Hopefully I'll see you there tomorrow morning, 8 o'clock Eastern time in the members trade room. If not, same time, same place tomorrow night. We'll wrap up the week tomorrow night, wrap up the year tomorrow night. In the meantime, be well out there, be nice to each other, and we'll be here tomorrow. Adios, amigos. Bye-bye for now.